What's up, everybody? Good morning. Welcome aboard to Trading with Bubba. And of course, the markets are trying to break out today, but we remain in this pretty tight consolidation. But we're getting a pretty big rally. And today versus the rest of the week, there's pretty much participation in all four major indices. So we'll see what it actually does and what it looks like. But I think the bigger story today is the jobs tomorrow. So you have to really decide how much you want to get involved with the action today. I mean, that's always something to think about when you look at it. And of course, as we look at the quick futures market picture, well, we're getting a little action here in the Dow. Maybe we'll pop a trade here. I don't know. We'll see. Let's see if there's anything we're looking at while I'm here. And no, the answer is not right now. But again, if we go back and look at the big picture of the S&P or the spiders, oops, wrong switch, wrong chart. Hold on one second. Let me fix that before I forget. I hate to make the wrong trade somewhere. Anyway, so we go to the bigger screen, and of course, the S&P is higher this morning and not quite to the breakout point. So again, we would be looking once again the continuation of what we started, which is selling premium. Okay, the S&P is right up at resistance. The NASDAQ up at resistance. The Russell down on support, which would have been a place to sell some put spreads. And of course, the Dow on support, which would be a place to sell some put spreads. So again, there are four markets that are all somewhat related, but they're in four different sectors of what we would be doing, 2 and 2, basically. So that would be something to look at and something to trade. Again, I don't think that now is the time to get too overly involved. I think that with the jobs number coming out tomorrow morning, it could create some grief. It could create some aggravation to you because, again, we don't know where the market's going to drive. And remember, that number comes out an hour before the equities open, before you can trade options. So, again, futures you can trade anytime. So I think you look, you can see Apple right at the top of the range. So we're still, if we go through our individuals, Amazon is still in the middle. Coinbase, again, as we mentioned the other day, it's a blowout trade. Look to get short, sell some call spreads. Worked out perfectly. Meta in that range held support. Okay, again, you're seeing, I hope you're understanding and seeing the consistency that we see how the charts react. Again, it's not always going to work. It's not always going to be the greatest trade. But again, if you're making trades that are conservative trades to begin with, knowing that you're in a slower market, you've got some big data coming out tomorrow, then these trades work very, very well. And again, you go down the line, you'll see that everything is relatively consistent as we've been watching. And I think this is the part, and it's the hardest part for many to learn, is to sometimes you just have to stay away and put yourself in very little positions so that you can maneuver and be ready when the markets make the bigger moves. I think this is something that is important for all of us. So let's go back and see if there's anything doing here. And certainly there looks like there's going to be a little bit of a trade in crude oil here potentially. So we may make that trade. And in fact, it will be. So let's just get ready to look at our short term here and pop one out here. Again, it won't be a trade until this turns red. And right now, if I make this trade, the stop will be on the crude oil at $70.69 would be our stop. But we do not have a trade as of yet, but we are waiting for one. We're waiting for the confirmation of that trade, which should be coming. Listen, the longer it takes, the higher I'm going to sell. So that's always a good thing as well. But again, right now there's not much. But so the overall picture while we're waiting for this is you got news, you got jobs, you got a slow market. That's not a great recipe for everybody. What it really is a recipe to get yourself into a lot of trouble if you're taking big positions, okay, that are straight directional without any protection. And I think that is something that you always have to remember, is that we have to be very defensive as traders and understand the type of market that we're trading in right now. And the type of market we're seeing right now is one that is quiet, with a true lack of real activity that is not allowing us to step out. Okay. And until the markets break out to the upside or to the downside, we have to continue to be patient and wait and watch. Okay. Again, the hardest part for traders is what we call the observation time, because right now that's really what we should be doing. Again, selling spreads is fine. If you're using the chart patterns, the levels, that's great. You sell your spreads. Yeah, but as far as regular trading and trying to get too overly active, looking for the big hit, it's more than likely, excuse me, not going to come within this time frame. Okay, you have to sit back, and again, we have to wait patiently for our opportunity. We're still waiting for this crude trade. I'm just looking to see if there's anything else appearing while we are here. And certainly the euro currency is a potential trade as well, which would have a stop of 108.11. Okay, if we were to make it. So let's go back here and see if we're getting them. So it looks like we're going to get this crude trade now. Okay, maybe. Again, I got to wait. You got to wait till the bar closes. Okay. But it looks like there may be a euro trade coming, and there may be a crude trade coming. Okay. And we will make, and as you know, I'll make them live here. I'm not afraid. I mean, it's what I do every day anyway. So it doesn't matter if I'm doing it with an audience. I did it with the audience this morning. We had a big day today. It was a nice little start to the week, and what looked to be a horrible start. The stop on crude is going to be 70.73 now, though. 70.73. And that is a trade. If you do trade it, that is a trade with a stop at 70.73. Okay, and make my stop in. Now I'm waiting for a potential trade here in the euro currency. Let's go back to see, excuse me, what's going on here. All right, nothing else really to do. But look at how light the volume is everywhere. Okay, there's nothing going on here. This is obviously very tough and very challenging. Got a nice little profit in our crude already, though. We're gonna let it run for a minute here and see where it ends up. But right now, I've got about $100 profit. I'm gonna go ahead and lock in, no worse than break even, so I don't have to deal with it. I'm gonna try to let it run and be a home run. But if it stops me out, then I'll make a little bit of money, and that'll be the end of the story. Okay. And it looks like we're maybe getting ready to sell this euro currency now as well. Okay. Oh, nice trade in the crude. Okay, really going straight down. In fact, let me see something here. It did not turn into a reversal, but again, and of course, you can sell the euro currency if you do trade that. Okay. Oops. With a stop at, what did I say here? 108.06, 108.06. Okay. And so now we're in a couple of trades. If you're watching, hey, listen, you don't have to trade with me. It's just something that I'm doing. I'm doing my job as I'm talking with you. So as we go back and look, okay, and finish out our view, NVIDIA is stuck in consolidation. The Qs stuck in consolidation. The Square breaking out to the upside. So now Square is breaking out. I would be looking for a pullback here to $65 or so as a potential spot to buy it. Here, I'd be willing to be potentially a little bit more aggressive. Why? Well, because now we have a reason to believe that it can go as high as 72, 73, 75. So now I have good faith belief. Here, I have no good faith belief because I've got a market that I can see is dead nuts in consolidation. Look at Tesla. Same thing it's been. Every day we look. It's either the top of the range or the bottom range, ultimately going absolutely nowhere. Okay. So again, this is what we watch on a regular basis. It has nothing to do with the news. All we're worried about, the reason we don't trade or put stuff on in front of news is because we don't want to have to fight against the reaction. Okay. Because basically you're taking a high probability trade and turning it into a 50-50 trade, which is not our objective. Our objective is to be in the position of strength and to typically be on the right side. We don't always know that we're going to be on the right side, but we know that by probability model and by reading the chart properly, that we are going to be on the right side more often than not. But once you throw in the quirk of news, which could spike the market, you could be short, it could spike the market higher for a minute, stop you out, and then go right back down to where you were, and then you'd be right, but you'd be out. So it's easier to react to the news after it comes out instead of trying to predict it in front of it. This is a thing that too many people get up in their mind that they know more than the market. And again, nobody knows more than the market. The markets are going to do what the markets are going to do. And we cannot try to outsmart it and try to outguess the news, because believe me, Goldman Sachs and JP Morgan and those guys, they already know what the jobs numbers can be tomorrow. They're already positioning themselves, okay? And they'll be ready for the reaction tomorrow, okay? Because they've already calculated out, because if you know the formula, which they do, and you look at the weekly reports that come out every week, then you know about what that number is going to be. So it's not a major surprise to them. You know, remember, the flow of information is so big, and it's nothing, they're not doing anything illegal. All they're doing is paying people to calculate that formula in which what the government uses to report those numbers. So they're already positioning themselves where you're sitting here trying to figure out what it's going to be. And even if you nailed the number correctly, you still don't know what the market reaction is going to be to that number. Okay? So these are the things that we have to remember is not only if we knew the number, it might not help us. You know, if you go back a number of years and remember when Martha Stewart went to jail, she was sitting on the airplane with the president and owner, basically, of ImClone. Okay, she got inside information from him as the owner, CEO. He was wrong. Okay, and she went to jail for insider trading, even though the trade was wrong. So it becomes back to, which is easier and more efficient to be able to react to the market than to try to outsmart it and try to figure out what you think with the news. In the meantime, our crew trade is working out very, very nicely. Our Euro trade's a little bit underwater, but still in play. But we're going to go ahead now and lock in half of our profits in crude, which right now I'm locking in $100 a minimum profit, and I'm allowing the trade to continue to go on. But I have no worse than $100 profit. Okay. And that's the way that I like to trade, where I continue to lock it in, and I will continue to watch and read the chart. And when we get down, if we get down to here, I will lock in again another half on the way down. Okay. If it stays where it's at, well, then I'm just gonna, take my $100 and go home. Okay, it doesn't matter. But I know what I've got. So now I'm gonna watch and look to adjust, but I don't want to adjust too closely because I also want to give it a chance to run. Okay. And a trade that I did make this morning, so I will talk about it, is we were short gold from here, and then we got an add-on from here, and I just covered down in here. Okay. And again, that's not luck. That is being in the right place, reading the chart, being prepared for what can happen. Okay. And that is something that you have to always remember, is to be prepared for what's going to happen, not trying to predict what's going to happen. Okay. So again, as we run through it real quickly here, dang me. Hold on. I always forget what chart I'm on. Okay. So as we take a quick peek once again, just to see, because not much has happened. I don't expect much to happen today. I don't expect it to be crazy. 160 point up in the NASDAQ is not that big a deal. Remember, one thing as a trader you want to remember is look at the percentage move, not the dollar amount, because the dollar amounts, when I started trading, the Dow was 800. Okay. The Dow is 36,000. So again, a 10% move at 800 was 80. A 10% now is 3,600. Okay. So don't look at the dollar move. The dollar moves will fool you. Look at the percentage move and over value. That's what you're really looking for. Nothing else. I mean, nothing else means anything as long as you understand. Again, here we're looking at a chart that is virtually untradeable. I can pick a side. I can try to guess, or I can just sell premium, which is the only way to go, because you don't have to be right when you're selling premium. You just can't be way wrong. Okay, you can be a little bit wrong if you sell a call spread. You just can't be dramatically wrong. Okay, so just keep those things in mind. Look, there's not a lot. Obviously, I wish I had more things to tell you and talk about, but there isn't that much to talk and tell about because the markets are kind of very stoic right now. But you're starting to see some breakage here. The Dow's, look at this. So now I'd be looking at and maybe looking at some trades in some of these other indices. Now, I'm not going to put on with you live because we're running out of time. Okay. But I will tell you what I would be doing and what I may do, but I won't be able to help you manage them because I'll be gone. All right. But again, right now there'd be a potential buy in the S&P, the NASDAQ, Dow not so much, Russell not so much. But if they did not make it, so it doesn't matter. They look okay. And if we were really busy, which we're not, I would be a buyer of the S&P somewhere down here when it qualifies. I would be a buyer of the NASDAQ when it qualifies. Neither one has qualified yet. Okay. You need a green bar on this chart, which you don't have yet. But again, these are things that you're continually watching, and what you're also forming at the same time are good habits, okay, versus sloppy habits and guessing habits. You're developing a good skill set to make you a better trader and a better investor, okay? So right now I have nothing to do, and as you can see, our crude trade is still open, okay? We are still in the crude trade. We are break even on our euro currency trade, and it is going our way now. Okay, so now maybe we can get into the profit there too. Maybe I'll lock that profit up before we go. But again, you're watching in right now. So right now you might be getting a trigger if you were trading the S&P. Okay, again, we're not there yet. We have to wait for the bar to close. This is a 1 minute chart we're watching, which is what I use as a trigger time frame. Okay, and it is a 1 minute chart after a 4 minute long-term chart. So I will see and continue to watch. And right now it hasn't signaled me to do anything yet. So I'm not doing it yet. I'm not going to try to jump ahead of it. I'm not going to try to get cute. Okay. I'm going to sit here and we'll watch these markets. And now look at that potential buy signal is gone. If you'd have bought it, you'd now be worried about chasing it down, which again is not what you're trying to do. That is not your accomplishment. That is not your goal. And look what's happened to crude. So now crude, I'm glad this is happening. Now, this is an interesting move here. Okay. Crude is almost creating a reversal. Okay. So now I'm going to go, this would almost be a reversal pattern right here. So what I'm going to do now is first I'm going to cut and take half again profit while I'm figuring out what I want to do. Okay. So now I've locked in $150 profit. Okay. But now I know that I'm going to be soon to exit this trade anyways. Okay. I can see that it's setting up for another blow off to the downside. And as you can see, the other ones haven't qualified yet either way, so it doesn't matter. So now what do? Well, now I want to make sure that knowing that I'm going to be in a potential spot of a reverse, I'm going to start putting in trailing stops now and let it trail down. And wherever it takes me out, it takes me out. But I'm going to let it trail me down so that I don't have to make the decision, because I already know that there's a reversal pattern that is coming, okay, and that it's going to probably put me long anyways. So I might as well make sure I get, the max amount of profit out of what I have on now. And the only way I can do that without just picking it out, and I don't want to just pick the number. I want to let the market take me out when it's time. So I'm using trailing stops right now, okay, on this, okay, and all I'm doing now is it's trailing down the market. Every tick down brings my stop down. Each one that I set down a tick, okay, and it continues to go down. It'll continue to follow it down. In the meantime, I've got $275 profit right now. Okay, I will get no worse than 175, but I am trailing it down as we go. The euro currency is now slightly profitable. Now, here's one quick thing before we ended it for today. Because this trade took so long to develop, I am going to put my stop in at break even right now. I don't want to really deal with it. I'm not closing it because I want to give it an opportunity to be profitable, but I am putting my stop in at break even right now. And so we had a nice little morning here trading, if you traded with me. And if not, maybe you learned something. And until Tuesday, which I'll be streaming live from Las Vegas for my seminar, have a great weekend. I'll see you tomorrow for the regular update, and next Tuesday from Las Vegas. Have a great week, everybody. We'll see you later.